Hello, this is Alex from DiamondArm. First off, read this disclaimer carefully. I'm hoping you are having a great day. Hopefully, this day will become a bit brighter because I will show you certain financial products that have been rallying, even though the market has been crashing. Yeah, it's been nasty in the market. Huge disaster happening, and it is reflected in this pink line. So this pink line you see here, that is the S&P 500. Here you can see that this pink line, it's crashing, utterly crashing. However, in the background here you have the TLT. It's an ETF, and it is the 20+ year treasury bond ETFs. So government bonds, it's one of those safe havens. So when people are panicking in the market, we do see people flocking into government bonds. So if we go further back in history, well, unfortunately we don't have too much history here, but during the financial crisis, government bonds, they did benefit during some of the more panicky periods. So here you can see the most recent developments. It's been a rather substantial rally actually. So let's measure a bit here. So if you measure from this low to this high here, that's a 48% rally in the 20-year treasury bond. That is a huge gain. So the interesting thing is that we saw strength in the 20-year treasury bonds before this total implosion. So the smart money was buying the bonds during this total panic. So that's one of the options out there. Let's look at GLD. So that's gold. That's also one of those classical safe havens. Gold is a fantastic metal because it's always, well, not always, but throughout the vast majority of human history, gold has been a source of value. It's been recognized. You could come into any place with a piece of gold and you would get something in return. That's unique. There's been many kinds of currencies. They have risen, imploded, so on and so forth. That's because they didn't necessarily have that intrinsic value. Gold has intrinsic value, deeply embedded in the human psyche, and even in our highly technological, rationalistic times, gold has been rising. So here you can see, the recent developments. This is going all the way back here to August of 2018. And you can see that gold was chugging along here, rising gradually from this level to the recent high. That's a 40% rise for gold. And during this more panicky phase here in the market, you do see a spike here in the gold price. So that's another alternative. The caveat here is that the Spider Gold Shares ETF, the GLD, it is denominated in US dollars. So even though you kind of have gold as an investment, it is indirect. That's why I am a huge fan of also having physical, real gold, because physical, actual gold is denominated in gold. So you can completely get rid of that currency effect. So yeah, gold, there have been rough times in the gold market for sure. If you go way back here, you can see that the gold reached a high around 2011. Then gold went into a pretty substantial bear market, but it seems to have formed a low here in 2015. It's been rising since. So, and this is what the technical analysts would call a rounding bottom as well. So during these panicky times, gold is an alternative. You also have silver. Silver, it's an interesting animal. We do see that it has some kind of tendencies that we see with gold, in that people do see it as something that's intrinsically valuable. It's something that is has a history of being used in actual commerce. But silver is also more of an industrial metal, so that's one of those other factors. But the same kind of people that buy physical gold, as a hedge, they also tend to buy silver, because silver is way cheaper to buy than gold. Another is actually platinum. So let's look at the platinum futures. So platinum is also, it's a precious metal, but it doesn't have the same status as gold, but we do tend to see some of the tendencies that we see, that people during times of panic, people might get into some platinum buying, but we haven't seen that. If you look at the charts here, you see the S&P 500 go down, and you also see platinum go down. So of the precious metals, gold is certainly the one that has the most direct, inverse-ish relationship to the stock market. Another way to more direct actually benefit from a declining stock market, that's to get into ETFs and funds that have the mandate to have short positions. So short positions, they are able to make money when the underlying goes down. So when the S&P 500 goes down, a short position on the S&P 500 would then rise in value. Here is one candidate, that's the Hage DGE, a Ranger Equity Barrett ETF. You can see that during the recent plunge, it's risen. You also have the more direct one, that's the SH, that's the ProShares Short S&P 500 ETF. S&P 500 goes down, this one goes up. You also have some long short strategies. This one is MOM, Market Neutral Momentum Fund, rising during the plunge in the S&P 500. You also have Betal, which is the Market Neutral Anti-Beta Fund. So here you can see Betal rising while the S&P 500 begin crashing. So those are some examples out there. Another alternative, that's the leveraged inverse ETFs. So you have the SPXS, S&P 500 Bear 3X shares, okay? There are complications with these kinds of leveraged products that you need to be aware of. So you definitely want to read, the disclaimers on the web pages of the companies behind these products, like Direxion in this case. But they will, give you 3 times leverage effect. So here we have daily data points. The other charts I showed you weekly data points. So each data point here is 1 day. Here in pink is the S&P 500. Obviously it's been crashing. That's not good. However, let's look at what this leveraged product has been doing. If you measure here from this low all the way up to this high, that's a 69% rise during a very short time. That's obviously pretty darn interesting. So the take-home message here is that there are always opportunities out there. Beyond what I've been talking about in this video, you have of course the Forex market. There's all kinds of Forex pairs, many Forex pairs, and some will be rising. That's another way to get some value. There are other kinds of bonds and more broadly fixed income that rise during a bear market. You also have a type of financial instrument that I find particularly interesting, and that's the options market. The options market is the most sophisticated and flexible market out there. You can benefit from the underlying product going up, down, sideways, rising in volatility, declining in volatility. I mean, the amount of strategies is absolutely just mind-boggling. Of course, because of that sophistication, there's a lot to learn. Okay, so the options market has a high barrier of entry, but I would really recommend you get into, reading up about it, maybe practicing a bit on like a demo account to get the feel of it, because options are absolutely spectacular instruments. As far as other thing goes, you have the cryptocurrencies, but we haven't seen the cryptos like Bitcoin really be perceived as a safe haven. They just haven't. They are still quite speculative. So yes, times are rough in the market, but there are strategies out there, and we do not know how far this current plunge will go. We just don't know. I looked at the charts just recently, and it seems like today is also going to be a bit of a rough day. And when things are going against you, you should counteract that. Let the trend be your friend. So that's the mantra. So be cautious, do your research, and while we hope for the best, we should also be prepared for the worst.